Let's talk about that cash receipts process, right? We've got our whole process where we have a sale, we make the sale, we have an AR, and then once we actually do receive the cash, the reason we talk about this so much is because, well, that's pretty important. Cash is obviously quite important. It's susceptible to misappropriation of assets, and we want to understand what is the proper way to manage that cash cycle. The following are important points for the cash receipts process to understand. Like I said, we will see this again in cash, not as extensively because we are seeing it here. However, when we do get to cash, we'll see this again. Kind of overlap there. So the mailroom employee is going to prepare a remittance listing that's forwarded to the cashier. A copy of that listing is sent to the AR bookkeeper to update the AR records. So what this is saying is the mailroom employee is going to receive those cash receipts, maybe in an envelope, whatever it is. It says here's $20. It's from Walmart. Then the mailroom employee is going to create a big old list, and then they're going to send that to the cashier. They're also going to send that to the AR bookkeeper, because then the AR bookkeeper is going to update the records saying, okay, hey, Walmart actually paid us $20, so lower that AR amount. Obviously, make that journal entry to reflect the fact that we can reduce AR and we can update our cash balance. A remittance advice is a document that outlines the details of financial transactions, such as receiving cash, prepared by the payor. It usually includes the date, name of the sender, amount sent, and account information. So we've seen this remittance advice. The remittance advice is included in the envelope. So we get an envelope from Walmart. It's got $20 in it. And in addition, it's got a remittance advice. It's a letter from Walmart saying, here's $20. This is for transaction 123. And that's important also because you got the cash application process. Walmart can send a bunch of different payments, and they will, right? If you got heavy transactions, you've got a lot of transactions, Walmart could be sending the $20, but which transaction does that apply to? That's very important. So the remittance advice is going to say, hey, this is for outstanding balance number 385. Because maybe they've got hundreds of outstanding balances with you as a company. Now, the remittance advices are all put on this remittance listing. So the remittance advices come in the envelope from the different customers. The mailroom employee is going to put them all together on a remittance listing. This is a big old list. Obviously, the auditor can use it to facilitate the audit of these cycles and the process. The listing here, right? Obviously, so we talked about that. Remittance advice, this is going to detail everything. We talked about remittance advice in the audit evidence lesson as well. These are often used as a proof of payment. Once the mailroom employee receives a remittance advice, he or she is going to add up the information to a remittance listing, as we mentioned, which is a duplicate listing of checks received. So you could also call this a listing of checks received, same sort of thing there. The cashier then receives remittances from the mailroom, prepares the daily deposit slip, and deposits checks at the bank. The cashier is going to have custody of the cash. The daily deposit slip is a document used by the cashier to record the deposits made to the bank on a daily basis. It usually includes the date, the amount of each deposit, the type of funds being deposited, whether it's cash or check, and the customer's name. And the daily deposit slip, it also serves as an accounting record for the cashier and helps to ensure that all deposits are accounted for. Understanding these types of documentation, how they're used in the cycle, going to be critically important for you. Let's see some examples here. Segregation of duties as it comes to our cash involvement in the revenue cycle. Following situations are appropriate examples of segregation of duties, because we'll see some inappropriate examples. So the billing clerk prepares the invoices. This is the record keeping function, and records the resulting increase in accounts receivable. Also record keeping. You see here, whenever you're seeing an example, and is this proper segregation of duties? Well, are they doing something that is within the same vein of the three? Authorization, record keeping, and custody. In this case, they are. Sounds good. Next up, an employee in the purchasing department approves purchase orders. That sounds like authorization, right? They approve something that's authorizing and negotiates terms with vendors. They have the authority to negotiate terms with the vendors. Maybe they want to negotiate, hey, you should pay us in 30 days, right? That's part of the terms. Or, if you don't pay us, it's a 3% late fee. There's a lot of negotiation that goes in there. Lastly here, the purchasing department prepares the purchase order. This is authorization. Then a different department, the AP department, matches documents, which is record keeping, making sure that all documentation is correct and that we can then go in and actually make the journal entries. And then lastly, the Treasury department makes the actual payment with the cash, which is custody. And this is fine because this is three different departments all doing different actions within our segregation of duties. I would be familiar with all of these. I mean, obviously, there's just so much to memorize if you're trying to memorize these. but try to understand them and do your best to just be as familiar as possible, because you can see just multiple choice questions one after another. Is this an example of appropriate segregation of duties? Or what is the appropriate response as an auditor? If you see a situation like this, is it to report it to management as incorrect or advise management? So seeing different situations like that, want to be familiar with it. Here are examples of inappropriate segregation of duties. Well, if we have an accounting clerk receives customer payments and records the resulting reduction in accounts receivable. In this case, this is someone receiving cash. Now, I don't care who this is. It's the accounting clerk or whoever it is, receives payments and then records. So it doesn't matter who it is, right? It's the fact that this person is receiving cash and then doing a record keeping function. That is definitely a breach of segregation of duties. Next up, a purchasing manager approves vendor invoices for payment. Okay. In this case, the manager can purchase whatever he or she wants without a check in place to restrict this unlimited authority. Now they're approving vendor invoices for payment. This is actually not dealing with our authorization, record keeping, and custody. I mean, yeah, this is really dealing with authorization, right? They're approving vendor invoices for payment. So in this case, just thinking about it logically, they can purchase whatever they want and just keep buying things. So usually, if you want to issue a purchase order for supplies for the company, right? Like, for example, I've got a friend works with the company she's at, and her job is to do everything from the accounting to also purchase supplies. If they need office supplies, whatever they need, great. However, she needs to send, let's say she fills up an Amazon cart with a bunch of supplies, and then she needs to send it to a manager, and that manager needs to approve it, because if the manager didn't approve it, well, she could just buy a bunch of buy a bunch of stuff from Amazon, and maybe half of it's for her, half of it's for the company. So you see the issue there. Next up, the cashier, which is a custody function, performs the monthly bank rec, which is a record keeping function. That's definitely a no-no. And lastly here, the treasurer's department, which receives cash receipts, that's custody, authorizes credit memos, that's record keeping. Here, an employee in the treasurer's department could steal the cash and write off the stolen amount as bad debt. Always looking for fraud. Obviously, don't do this. We have to examine the fraud to understand it, to audit it, to make sure it doesn't happen. Do not become a master of fraud just because I'm giving you instances of how it is conducted. Obviously, that's a joke, but seriously, do not commit fraud. I will not be responsible for you all learning how to commit fraud properly and then going out and doing it. Okay, as promised, here we finally are. We've got these big, old, wonderful cycles. And as we see here are different departments. So everything within here is the sales, is part of the sales department. Everything within here is the credit department, the billing, etc. And I've outlined which function each of them serves. So the sales department has authorization. So does the credit department. The billing department is in charge of record keeping. The warehouse department has custody of the assets, and then the shipping department also has custody, right? But it's important to break these out as we do. Here's basically the entire revenue cycle. Here's how the process works, and then we'll actually continue on another slide. It's way too much to fit on one. All right, we have a customer, right? They go on your website, they submit a purchase order. They say, hey, I want to buy 10 planks of wood, right? I want to build a nice treehouse in my backyard. Well, good for you. Sounds good. Hope the treehouse comes out great. So preparing that sales order, you're going to send a credit copy to the credit department as part of the sales department. Hey, should we sell to this person? Do they seem like a creditworthy person? Will they pay us back? Presumably it's approved. If not, it would just die here and we wouldn't go on further. So then we send that credit copy back. It's approved. Now, you could also, just as a note, depending on the order, if you followed my logic and are doing our slides in order, this is likely the first of these cycles that you've seen with all these different shapes. Now, what you see here, this is generally the format for these different graphs. You'll see the shapes resembling the same sort of thing. So you see this shape right here, and God knows I don't know what that's called, but this is generally resembling some documentation, right? So you see credit copy, that's a document. That credit copy, that is also a document, right? And these all are going to relate similarly. So these circle ovals, I guess they're technically ovals, these are going to be certain parties. So a customer is a party, right? Inventory control, customer. Now, obviously that's another note. Now, for the exam, yes, I'm pretty sure they follow the same logic. And with that being said, but if they didn't, right, look for commonalities in what the particular charts are displaying. Because you could see a sim, where you get something looking like this. However, a few of them are blank, and you need to populate what belongs in that specific shape. So, logically speaking, like that's what I'm saying. I wouldn't recommend memorizing the shapes and what they represent. I just personally wouldn't. But what I do is if I had a particular sim like this, which you can get, I would say, okay, I know that, again, this shape is very much resembling a document. So, if I give an option that is another party or a person, I'm not going to put that there. Also, getting as familiar with these cycles as possible will obviously help you. It's not going to look exactly like this, but this process is a pretty universal process. Moving along here, so we've got all of these documents that we're going to pop up throughout. We're going to see the customer copy of this. We're going to send it back to them. The stock release is the form that you're going to send. We'll see this later to the warehouse that says, hey, you are approved to release this inventory and send it out to the shipping department. A file copy, make copies of everything. Packing slip, that's going to be put in the box. Shipping notice, file copy, invoice, ledger copy. And these file copies, these are just copies of all of these, just essentially saying like, okay, here's a copy for the ledger, and here's a copy to just put in storage for our files. We're going to see a lot of these pop up, obviously, throughout the rest of the process. So let's see how it works. We're going to see here that once it's approved, once this transaction is approved by the credit department, we can go over here. We are going to send an invoice over to the customer. We're going to make a copy for the general ledger. We're going to make a file copy just to keep within our records. Then we're going to reconcile, add the prices, and bill the customer. You just see here a million times, just make copies and include it in the file, whether it's the bill file or the credit file. Then we're going to make a record in the sales journal. You see I'm kind of jumping around. I'm not really going in any particular order, just trying to understand the flow of this, the process, the chart. There's not one mainstream kind of way this goes. We see here that once we bill the customer, these arrows are essentially notifying each party of everything. And then we can release the stock. That is going to be what we do with our warehousing department, right? Once the stock is released, then we make a copy again, we pick the goods, and then we have documentation of that. We are going to then give it to the shipping department. The shipping department's going to prepare the bill of lading and any shipping notices that we need. They're going to include that. They're going to release it. They're going to include it in the shipping log. They are going to then give it to the courier, FedEx, UPS, get it out there. This is the general process. I mean, I did kind of skip around a little bit. You don't need to know absolutely every coordination here. Just like get a general idea, because this is obviously quite complex. There are going to be a lot of these. There are going to be a lot of these for each varying cycle. So take a look, interpret it. What I would say is look through it and try to understand the connection, where every arrow is moving and where it all connects. All right, continuing on with our cash portion here. We are dealing with the billing department, still with record keeping, inventory control. Here we're going to deal with record keeping as well, accounts receivable, and the general ledger. Now, that ledger copy, that is going to go all the way over here to the accounts receivable department. Going to update the accounts receivable records, and it's going to go to that specific AR subledger. Again, like I said, there are just so many ways this can be presented. It's more not memorizing, but more understanding and being able to interpret if you do see this yourself. The stock release, that's going to go to inventory control for record keeping, updating the inventory subledger so we know in our accounting system how much more we have of each particular item in our inventory, right? That's going to be important. The stock release, it's going to go into the file, making copies of everything. Our journal voucher is going to go all the way here to our general ledger. So here's where we are going to update our specific AR subledger and inventory subledger. Then we're going to update the overall general ledger here. We are going to see the AR summary. This is going to flow down. All of here is going to update the general ledger from the journal voucher and reconcile. You want to reconcile what the general ledger has with the AR department and the inventory department as well. And essentially, this is the process, right? You reconcile and update the general ledger. Lots of great moving parts here. Very complex system, but this is really like how it all works. I mean, this is the most complex it'll get. This is how our revenue cycle functions. Here's a flowchart that is going to detail the sales order process. Now, generally, this is just kind of how it works. Customer is going to send an order in, customer order. We receive the order, and just keep in mind, this is now a separate flowchart, essentially doing the same thing. It's actually much more concise flow chart. It is not going to be built upon, the other one showed us a breakdown of each department. This is just kind of the general process. We receive the order, then we're going to send the sales order for a credit check, and then it flows back around here, approve the sales order. Again, presumably it's going to be approved. Credit is going to be approved here from the credit records. We check the records. If this person has bought from us before, we say, okay, awesome, we can sell to you. Then we are going to go over here. We're going to eventually ship the goods. But before then, we got to pick the goods, verified stock release. It's all going to be a part. So each of these arrows is kind of like a check and balance. Like there's something that has to be done here in order for you to proceed. These items here, these are all the different files. Maybe if we take a look and once it flows through, we hit this part and then there's a back order, then okay, we're actually going to, kind of pause here and then go and notify those involved that, hey, there's a back order. We don't actually have the good to send. That would obviously be an issue there. We see here, or ship the goods and then bill the customer. Customer is going to then get a sales invoice. It's going to go back to the customer. It's a very, very complex web of a sales order process flowchart. And once we bill the customer, we are going to send the sales order, which what are we going to do? We're going to make a copy specifically meant for the ledger. And we see here, we've seen this a few times, that there are specific copies for whether it's just keeping in your files or actually going to specific departments or meant for the general ledger at the end of the day. We're going to update that AR record. The total amount due is going to go to the AR subsidiary ledger. Going to make a note there. All of this is eventually going to get posted to the general ledger. The changes to AR, the changes to sales, the changes to the inventory balance. This is all going to get included. We've got different files that are all going to be included in the general journal, keeping this general idea in mind. So this is generally the sales order process. So specifically the sales order. We didn't really get into the cash part yet. Just understanding this, having a good time with it. We worked very hard getting all these ready for you. I hope you enjoy and take time. This is not the easiest thing at all by any means. It's quite complex, but it really is the best way to present how it all works. And well, unfortunately, not every single transaction can go through. Some of them get returned. We are going to go through this sales returns flowchart. Now, the customer, unfortunately, is going to say, hey, thanks for the product, but I want to return it to you. They are going to send a packing slip with the product back to you, right, to your audit client, and you're going to prepare a return slip. You're going to use the copy of the return slip and restock the goods. You are going to update your records and say, yep, we now have additional inventory because someone returned it. Then we're going to go over here, prepare a credit memo. This is the process of issuing the refund, updating everything, right? Because essentially this whole sales return flowchart is reversing everything that we had done before. Here, we need to go through and essentially go through the credit process again. We want to update the sales journal. We're doing contract counts. We are just reversing every journal entry. That's essentially what all of these are doing. We're updating the AR records. We're going to update the inventory subsidiary ledger. Essentially, we want to get to the general ledger. And really, we're just completely entering opposite journal entries to what we had done. So that's the gist of it, right? Just be familiar with kind of this concept of the sales returns flowchart. The cash receipts flowchart. So we'll obviously see this when we get to the cash receipts and cash cycle. But here is what we're going to do when we have cash receipts. This is the overall process. Customer is going to send the check, and as we mentioned before, the remittance advice. Now you as the client, or the audit client there, the company, you're going to open the mail, prepare the remittance advice. They're going to make that remittance list copy. That is what that cashier is doing. Remember, they're making that remittance list. We're going to send a copy of that remittance list to the AR records. They're going to update that in the AR subsidiary ledger. They're going to write down AR, right? They're going to debit cash and credit AR. Looks good there. We want to update all of the accounts receivable records. We're going to reconcile cash receipts and deposits. Make note of that because here we're dealing with the AR account. We're dealing with the cash account. That's something we need to take into account as well. The whole process around, we're going to record and deposit the checks, come around here, and we're going to bring it to the bank, right? That's important. Then once we put it in the bank's going to give us a deposit slip so we can update the cash account, the actual account on our balance sheet that reflects the cash. And yeah, just kind of like the general gist. I'm not trying to go through absolutely every single arrow here and every single process, but just understanding the main points, the most important points that you'll see on the exam. Now we're seeing the cash receipts flowchart through the perspective of breaking it out into different departments as we had seen with the revenue cycle with sales. Now we have the customer, right? They're going to send us a check with a remittance advice. We're going to reconcile the checks with the remittance advice and prepare the remittance list. Get that remittance list, and that's essentially the mailroom's job. So they are done. They are going to send that remittance list and that remittance advice. We're going to that remittance list to the cash receipts department. They are going to deal with that. You could also call this the treasury department. They are going to process the cash receipts, create deposit slips, essentially put it in the bank, update the cash receipts journal, which is going to update the general ledger overall. Then we are going to update the accounts receivable department. They are going to update the AR ledger, right? Same sort of process, understanding that the mailroom obviously has custody, and then also this department obviously has custody as well, since they're the ones depositing it in the bank. This accounts receivable department is going to deal solely with record keeping, updating the records, the company records. Then we get the general ledger, which is just the accounting department. Here is where we're going to deal with updating the accounts, updating the files, updating the general ledger. And then over here, we get to record keeping as well, which is the controller. The controller is going to get that remittance advice, update the remittance list, and essentially do all of the reconciliations. Think of the controller in a company as the head accountant. So this is the overall accounting stage where they're just putting the cap on everything. They're dealing with everything accounting related, reconciling the deposit slip from the bank with batch totals from accounts receivable, cash receipts, and remittance list, taking a piece from every single step along the way and reconciling it all together. Here is a sales returns process, but again, with our departments. So with the sales returns process, and we're seeing these, understanding them. This is a solid way to visualize all of these business processes within the revenue and cash cycle. So the customer is going to prepare the return slip, they give it to us, send it to the warehouse within the receiving department. Then we're going to give the return slip to the sales department, which has authorization. They're going to prepare that credit memo. They're going to store it in the file. They're going to give it to the billing department, essentially going to deal with the sales returns and allowances account, going to reverse that and give that credit back to the customer. Going to send that over to the inventory control. Going to update the inventory record. So you see how it's all separated out. Those who are in charge of inventory, we don't want them in charge of cash. We want that all separated out. Then we're going to have our accounts receivable department, which again, at this point, you're going to definitely have this memorized. They're in charge of record keeping, and the general ledger department, which is also known as accounting, they're in charge of record keeping as well. Again, same process we've seen. Just want to show it to you again in another format. And I know can be super repetitive. So take it as much as you will. Take it, one slide at a time. Try to do your best to memorize as much as you can. Obviously, like I said, don't memorize everything, but memorize the most important parts of what I've been saying and try to understand it overall brought together. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.